Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. Equities markets have closed. It is Tuesday, March 29th, 2016, and this is Trending Markets. We do have a nice rally underway in U.S. equities markets, Standard & Poor's 500 also. We did send out a special trade alert this morning recommending that traders get long the S&P. We'll cover that when we look at our first chart. Markets trading substantially higher today, currently trading at 2046, the high just above that at 2048, and then the low, which came in this morning before Janet Yellen spoke, was 2019 on the day. So traders, as we go into settlement, it does appear as though the S&P is going to close up solidly up about 19.5 points, a full percentage point gain almost at 2047.50. We did send out a special trade alert this morning recommending that our subscribers for Trending Markets get long the Standard & Poor's 500, of course vis-a-vis the E-mini. Traders taking that call got in at roughly 2046. Now, the rationale behind the call, obviously we've had the speech by Janet Yellen affecting two markets in a very, very bullish manner. It's one of the few times that we'll see equities and gold run together, which is why I actually issued buy signals for both gold and the Standard & Poor's. Now, as far as the Standard & Poor's go, what was very significant to me was, first of all, we talked about this the other day. We had a tremendous trade. We got in at roughly right in this area at about 1979. The market comes up, and then as it came down, it did stop us out, and it stopped us out with a nice profit, of course, as the market came down. And this is where the stops, of course, were hit. Our stops were sitting at 2019. We had a day of what I considered to be consolidation. We spoke about that yesterday, that we had a consolidation day, and then we had this tremendous spurt up today. And what was very, very significant to me was the fact that we began to trade over a 2043.95, so call it 2044. That's our 23% retracement. And that to me is a key area, because once we're above this particular area, my sense is that on a technical basis, we could in fact see this market take a stab at these historical highs up at around 2100. And that was the motivation behind this latest call, and also our current exit strategy in terms of where I believe we could see this market go to. Now, the next real level of resistance that we're going to have to clear, so to speak, is roughly at about, call it 2075, and it's this top here. And then after that, you can see you've got these double tops right in here. That would be the next level we want to look at should the market continue to go in our anticipated direction. And if it can breach this particular area, traders, I think we're going to take a stab at 2100 once again. And traders, that would be exciting. So traders, we're taking a look at the dollar index, and there's no doubt that over these last couple of months, we've seen it under tremendous pressure. This, of course, is a weekly chart. When we look at the weekly chart, we talked about some real resistance up at 98. And as you can see, as this market came up, we had those 3 consecutive down weeks up until last week when we attempted to stage a recovery, 9,500 being a support area that we're looking at, a critical support level. You can see it comes right before this breakout. Not too much activity right in here throughout this year that gives us this reference to this particular price point. But clearly, as you can see, although it is only Tuesday, we're already making a stab at this area. We didn't clear it, but traders, should we go below, call it 9,500, and we're closing at 9,517, we could see some pretty dramatic pressure, and the next major support level doesn't come in until about 9,300. And traders, lastly, did want to take a look at crude oil. Now, crude oil was off about 2.5% today, down $1 a barrel, 38.36. We talked about the fact over the last couple of weeks that we definitively saw a real ceiling in oil in terms of price per barrel at around $40. Now, we did get a couple of highs over the last couple of weeks that exceeded that $40 forecast that we put out. However, on a closing basis, we have not closed above $40 since this rally from 26, and in fact, you can see are now moving down well below $40. Of interest when we look at oil is the fact that we have a significant rally in U.S. equities markets, and the U.S. equities markets are definitely discounting and kind of removing themselves, or uncoupling, I should say, from crude oil prices, and they are now trading independently. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow for another Trending Markets. Bye-bye.